Thank you very much. Thank you. So I think I'd need to actually start with an apology. I woke up in Ireland this morning. I did go to bed in Ireland, so there was no surprise there, but I woke up in Ireland at 3:45 this morning, so I'm a bit blurry-eyed. Then, that's why I'm off caffeine at the moment. So if I'm a bit blurry, it's the lack of caffeine as opposed to the fact I may have had a couple of pints of Guinness last night. But no, I was over in Ireland chatting with a client of ours. It was so great to get in person with them, and I've been doing quite a lot of travel recently. So my last trip was 2 weeks ago. I was over in Seattle, in Washington, in the US. I was welcoming our latest new client to the Nudge community, a global tech firm who are headquartered there. And what I hadn't realised when I booked the trip is I was there for the US election, which was fascinating, particularly being in Washington, which is quite strongly Democrat traditionally. And so it was a fascinating trip all in all. But in terms of a bit of a story, so the election was on the Tuesday. When I got my Uber back to the airport on the Wednesday, as I always do, I got chatting to the cab driver, and he was absolutely ecstatic about the news. Really, really pleased. And it turned out that he had a lot of Bitcoin, and he said he was absolutely delighted that not only has his Bitcoin shot up in value overnight, but also he was very excited about all of the chat about it becoming more mainstream, and him, as he described it, being able to spend his Bitcoin rather than having to sell it. So then 2 weeks on, this morning, when I got the cab to the airport, this time Dublin, again, got chatting to the cab driver. He asked me what I did. I explained that our business helps people better understand their money. And he said, goodness me, I could do with that. And it turned out that he had fallen victim to a Bitcoin scam. And he was, he'd lost a lot of money from what I could work out. And he was really angry that it wasn't more closely regulated. And it just occurred to me, as I was dozing in and out of sleep on the plane this morning, that, same topic, same fortnight, what is it? Probably 4,000 miles apart, though. Completely different experiences, and it made me think that this is the thing about money. It's so that's an example of something that is a consistent topic, but there's so many different topics across the world. There's so many different laws. There's so many different products. There's so many different cultures when it comes to money. You then layer on the fact that money is changing all of the time, this huge dynamism that comes with money. It means that it's really difficult for employers like yourselves to support people in an equitable way. I think one of the opportunities that comes, though, from it being such a big topic that's so complicated is there are lots of opportunities that can come from helping people better understand their money. So or providing financial education, I should say. So if I think back to that example in Seattle, I did some digging because we won the deal through an RFP, so it was a great opportunity to really get to know them and do some digging and ask them why. Why are you doing this? Why have you decided to make a big investment to support your people's financial well-being? And for them, the why was that they want people to work there because they love their job. They want to completely remove the distraction and the stress of money, which I thought was brilliant. If I think about PepsiCo, who I was with in Ireland yesterday, it was because employees were specifically asking for more help, particularly their frontline workers. Earlier in the week, I was speaking to a London-based client who is going through an IPO. So next year, they're going to become a public company. And for them, it was about protecting their people and enabling them to manage a windfall when it comes. So there's so many different reasons that organisations do this. But I think the one consistent reason is for organisations to better understand their people, because seeing how people are thinking about their money is a really accurate barometer for what's going on in their lives. And that, I guess, fairly long-winded intro brings me to this session today. So I'm going to talk to you about what we're seeing in the market, what people are learning about, and how that's changing over time. So the data that we are providing, we call nudgeonomics. There's a few clients amongst I can see in the crowd. We call nudge. You'll be familiar with that phrase. And so we're tracking the interactions, the engagement of almost 5 million people now across 160 countries. So there's billions of bits of data there. And what I'm showing you today is August, September, October. To try and break it down, I'm going to start with the world, then we're going to look at regions, and then we're going to look at individual countries. The way that we categorize money is across these 5 different pillars. So the higher the score, the better. So borrowing is that employees understand their borrowing and they're able to pay it back. Learning is essentially their financial literacy, so their knowledge. Planning is that they've got a goal and they've got a plan and they're delivering against that plan to achieve it. Saving is that they have spare cash, and so the ability to ultimately progress towards that plan. And spending is ultimately more money coming in than going out. And so what you can see on the right-hand side here, which aggregates those 5 pillars, is there's been a drop. It's a relatively small drop. But if you think about the timing of this, so August, September, October, a lot of uncertainty in the world. There were elections across the world, but think of the UK about the budget. A lot of people were kind of waiting to see what happened. So I wasn't entirely surprised to see that dip gently. To kind of pull out a couple of, for me, interesting bits here. So the borrowing score is very high. Now we know that borrowing generally in the world is at record levels. It's not just governments, it's not just businesses, but individuals. We're borrowing more than we ever had. The reason that score is so positive, though, is although it's high, people seem to know what they're getting themselves into. And I think that's also interesting, reflected by the fact that the spending score is pretty much identical. And they've both remained pretty consistent over the course of this year. So what we can see is that people are borrowing a lot, but they're adjusting their spending accordingly. The challenge is, though, with people focusing on that spending and borrowing, that's been at the compromise of their planning and their saving. So you can see that firstly at 42 and 34, they're already a lot lower, but also they're trending downwards as well. If we then think about this from a regional perspective, so and you can imagine there's huge detail that you can go into all of this. So you're potentially thinking, what about that region? We've got all the data that supports this. But to pick out a couple of examples here, so the US and LATAM, so what's that, west of the UK, they've both dropped. So we saw a drop across both of those between the second quarter and the third quarter. Whereas EMEA and APAC are actually pretty stable from one quarter to the last. Now, in terms of Latin America, I'm not sure if people have employees over there. That saw a big drop. So from 3 months to the next, we saw that drop from 55 to 50, which is pretty significant. Now, if you have got people over there, particularly a lot of our population in Latin America are in Argentina. And if you've got people there, you'll know that it's been quite turbulent in Argentina. About a year ago now, the new president came in, Milei, and legislation's been completely slashed. Public companies have been privatized. They've shut the central banks. There's all sorts of things happening. And as a result, inflation's running pretty wild and people are borrowing a lot. And I think that's reflected in what we're seeing here. I think the other reflection for me on this slide, if we look at the charts, the bars on the right-hand side, so you can see here, if we look at learning, North America and EMEA are the highest ones there. They're scoring the highest. And for me, that is recognizing the maturity of these markets. So we've been delivering financial education for 10 years now. organisations have been doing it in the US for about 20 years. In the UK, we're kind of probably one of the first players. And I think the fact that those markets, North America and EMEA, are scoring higher reflects that maturity of the market. People are more used to learning about their money. And interesting, you'll see that the shape of that section pretty much identically matches planning. And so what we can see is that where people are learning about their money, they're planning more. And actually, if you think about kind of rolling this up, what is the most important pillar is probably planning. That's ultimately what we want people to be doing. We want people to be thinking longer term about their money. If we then look at it on a country by country basis, I'm conscious there's a huge amount in here, but just to pull out those countries that have seen the biggest change from one quarter to the next. So firstly, China. So if you've any interest in China, you'll probably be familiar that bank lending has dropped a lot, particularly over the last few months. There's a lot of talk from Trump at the moment about particularly large tariffs on China, but there's already some pretty large tariffs around, for example, electric vehicles. And so what we're seeing is the users that we've got in China, their confidence is a lot less now, and they seem to have a lot less cash as well. And I think that explains that increasing drop that we're seeing across China. If you look just to the east of China, to Japan, so the economy is improving in Japan. They had many years, if not decades, of negative interest rates, and those interest rates in Japan are now positive. What that has meant is they have a much stronger yen, much stronger currency. As a result, imports are cheaper. So there's a lot cheaper food, cheaper energy, and we're seeing that through that score increasing over there in Japan. If we look right over the other side then to Canada, so you can see that the against all of, I should have probably explained, the pink number is the score for each of these countries. The grey number to the right of it is whether it's changed up or down, and then the words are the call out. So these are the three top topics that people are learning about. And so for me, when I see the three top topics being everyday money and budgeting, that's a warning bell. If people they're not thinking about investing or retirement or families, they're thinking about how do I make my money this week go further, that is a canary in the mine. And so what we're not necessarily surprised to see that in Canada. Interest rate has been cut twice this year, but a bit like we've started to see in the last few weeks here in the UK, mortgage rates are actually going up in Canada. So people are feeling the pain. We work with a Canadian bank, and they've used this data quite effectively to firstly create the business case for the budget to spend on a discount scheme. So saying, look, we can see that our people are struggling. That's created the budget for them to spend more money on discounts, which essentially gives people money straight away into their pockets. And then secondly, they have used this data to provide a very focused campaign around increased pay rises for their lower workers. So you can see not only does this demonstrate that it's useful for organisations to understand where their people are at, you can see how this starts to feed into that strategic planning. I use this slide quite a lot because I think that for people who aren't familiar with Nudge, they see us as just the personal finance bit at the top. We're delivering financial education. But actually, organisations who've worked with us a bit longer, clients, recognise that actually, if you think about it, money is this ribbon that connects the whole HCM ecosystem. Whether that is accompanying pay rises, like I talked about with that Canadian example, whether that's about supporting pension change, whether that's about helping redundancies, whether that is around tackling stress-based absence, because we know where people are learning more, they're planning more, their stress is coming down. So there's lots of ways that this type of data could be used to create business cases and really bring it back to why is an organisation really doing this. So might be global mobility, for example. If you understand employees, you can then start to apply that data. In terms of the kind of thinking about how you do something with this. So as I mentioned, money's very complicated. It's changing all the time. There's probably all sorts of different data sources of data that you're getting from your employees, whether that's from your EAP, whether that's from HR people on the ground. It can be quite difficult to know how to progress that and introduce a support mechanism for your people. We've done this many times before, and so with the help of our clients, we have created a playbook, which on stand 16, which is just to the left out there, you can come and scan the code and request a copy of the playbook. But essentially this will help you go through this journey of, okay, we think that we need to help our people with financial well-being through to how do you actually launch a program like this. So very simple, but starting with really digging into that why. Yeah, it's amazing. A bit like my kids when they're trying to annoy me. Ask me why, and anybody who's got kids has probably been subject to that as well. You know, sometimes I feel I'm annoying our clients when I'm really digging into, but why are you doing that? You know, why do you want your people to be less stressed? Yeah, is it because the finance director is telling you productivity needs to go up? Is it because of your healthcare claims? So there's quite an art to really digging into why you want to do something like this. And the rest is then pretty self-explanatory. So there's a huge amount of data there, summarized in 16 and a half minutes. But hopefully it's whet your appetite a bit and giving you a bit of information that you can come and download the playbook and see how we can help you from there. Thank you very much.